Well, with debt problems roiling Europe, who better to hear more about that from than Mohamed El-Erian? He's the CEO of Pimco, home to the world's biggest bond fund, and he's on the phone right now talking to Bloomberg Radio's Tom Keene and Ken Prewitt. Let's listen in.
We welcome all from Bloomberg Television and Betty Lou, and I want to go right to a chart, if I could. This is the two-year yield, Mohamed, Greek versus Germany, and you can see the emotion up in the two-year space. Mohamed, is it a question of domestic dialogue by the Greek government to build confidence, to bring that stress in, or do we need to see a restructuring announcement, something more towards what we hear from Daniel Gross?
We need to see four things. We need first to see the Greek government being able to sell to the population the need for a sustained adjustment effort. The problem here is that Greece only has one instrument, which is budget adjustment, and that's a very blunt instrument. Second, we need to see the Europeans get their act together and decide once and for all, are they willing to put in new money and do so in a very aggressive fashion, or do they want a longer-term solvency solution? So are they focused on the liquidity issue or the solvency issue? Third, you need the IMF to be able to coordinate all this and to be the credible conductor of what is a hard crisis management process. And finally, you need the markets to calm down. Ken, the reason why you're seeing volatile and lower prices for Greek government bonds bringing out sellers rather than buyers. It's very counterintuitive. Why do you bring out sellers when the prices go down? It's because a lot of investors thought that Greece was interest rate risk, not credit risk. So they scaled it too large. And now they've woken up to the fact that it's not interest rate risk, it's volatile credit risk, and that's exposing them to both losses and reputational damage. And that's why we continuously see people selling, even though prices have gone down a lot.
Is there a point at which Greek sovereign debt becomes attractive to, say, Pimco? Or is that totally impossible and you'd never lend the money at any rate?
No, I mean, we always look at the price. Right now, we're not at that point. Last time I was with you a few weeks ago, I said we are on the sideline because we thought that the problems were deep. We're still on the sideline. We're watching. We sold our Greek exposures early on. And there may be a price, but critically, Ken, it has to be a price that can be sustained by the economy.
Dr. El-Erian, the idea here of liquidity versus solvency, and I'll agree with you strongly on that, the idea here is to go back to August of '07, where we used phrases like ring fence. How do you ring fence a sovereign debt challenge? Isn't the only path an equivalent to a Latin American restructuring?
And that's where you get the two approaches that you mentioned, Ken and Tom, earlier on. You get the politician who basically want to kick the can down the road. So they think of it as a liquidity issue.
Right.
And they don't want to deal with the bigger issues because the bigger issues of solvency are much more difficult. Then when you have an economist like Marty Feldstein comes on and says, hey, wait a minute, it's not just a liquidity issue, it's also a solvency issue. So let's deal with that up front because that solvency issue is not going to go away. And what you need is the political and the technocratic elements to come together. And it's very tough.
Well, briefly here, on the same day, we have a story that Argentina has formally authorized the opening of its restructuring of $20 billion in defaulted debt. I believe this is 33 cents on the dollar. Is Greece going to play out the same way?
If they don't get their act together quickly, and by them it is Greece, it is the European Union, it's the IMF, at some point there's going to be talk of something called private sector involvement. How do you bail in the private sector, either on a voluntary basis, as happened in Korea in January of 1998, or on a concerted basis?